All right, so we are live on Facebook. Good afternoon, everyone, and welcome to our webinar today. We are really excited to have each and every one of you here with us. Today, we're going to have a class, and we're going to be teaching on tax planning for a successful entrepreneur. I hope we can all hear me.
Yes.
All right, great. And I'm really excited today because we're going to have a tax expert that's joined us, Mr. Russell Follis. He's a tax expert and a CPA, and he's going to be walking us through what we need to do as we embark, or for those of us that have already embarked on our entrepreneurial journey, on preparing our taxes and the documents and all the necessary documentation that we put together. We're also excited that Mr. Rose is an expert in the PPA, and he's also going to take us through that today. So a few house rules. I'm going to ask that please, as we come in, please mute your phone so we don't have any disturbance. I'm also going to do the same with mine because Mr. Russell is going to start teaching first. And once he finishes walking us through all the requirements and what we need to do, we can start asking a question. So a couple of people already sent their questions to me, so I have those down. And if you want to ask a question, please raise your hand, use the logo, and just use that to raise your hand so we know you have a question. You can unmute yourself and join us at that point. If you don't want to do that, you can also type your questions in the chat box, and we'll appreciate it so that we can have supporters. So we appreciate everyone that's coming in. And we're going to hand over to Mr. Russell to kick off the class today. Thank you.
Okay, thank you so much. Thank you so much. Thank you for having me today. It's a pleasure. It's actually, as you may know now, this is going to be my first time to actually talk about tax planning and legal requirement for business owner, for new business owner. Okay, so I'm going to share my screen. I don't know if you can, if I'm allowed to share the screen to share a couple of slides that I prepared for the presentation. Am I able to share the screen?
Yes, you're able to. I'm going to make you a co-host now, and you can share your screen. Okay, are you able to do that?
You need to share with the other name. I have two names here. The one without picture.
Okay.
Yeah.
Hold on a second. All right.
Can I share now?
Yes, you can go ahead and share now. Okay.
Can you guys see my screen?
Not yet. I just made you the co-host, a host, so you should be able to share your screen.
Host disabled participant share screen. Use the other name also without the picture.
Let me see.
Without
okay.
the
Okay, without. All right. So you need to you need to send the co-host info back to me, so that way I can make that. Yeah.
Let me see. Share. Yes. Yes, I think it's back to you. Can you see it?
Okay. Yes, I can. So I will make you. So do you want to try it again?
Okay, let me try again. Keep doing the same thing. Okay, it keeps doing the same thing. Host allow you to record this meeting. You need to allow any participant to share. You need to allow any participant to share.
Okay. Let me do that.
Yeah, allow participants to share, but I'm going to be the only participant with the other accounts. Share.
You wanna try again?
Yes. Okay, that's good. I think it's working now.
All right.
I don't know if everyone can see that now.
Yes. We can see
Okay,
it.
let's get started. My name is Russell Forrest. I'm an agent specialized in tax and accounting strategy for small business owner and entrepreneurs. So in today's webinar, we are going to share, first of all, some requirement about what a new business owner entrepreneur need to gather as a legal requirement and tax requirement in order to conduct the business the way it's supposed to. Okay, so the first thing right away is to know that if you want to conduct a business the right way, because everybody can conduct a business. Whenever you are buying stuff and selling, you are doing some type of business, you can actually claim them into your taxes. This is called self-employment. But if you really want to conduct a business, the legal requirement is that you need to register the business with your state and comply with the registration and the conducting of the business in that state. It differs from state to state. Some states you just need to pay the registration fee, and you good. But for some states, you sometimes have to do some additional requirement. For example, in New York, you have to do the publication. You have to publish your business for like I think 6 weeks, six consecutive weeks. That means if you don't do that, your business is not fully registered. So you need to know what are the requirements to register the business in your state. That's the first thing. Otherwise, you don't have no business. The second thing to have is that you need to apply for an EIN number. The EIN number is actually the federal, it's like your federal social security number for your business. That is actually how the federal will recognize your business. I know many states, when you go to business in the state, sometimes the state will issue some type of tax ID number. And whenever I'm asking people, okay, do you have an EIN number? What is that you're talking about? Tax ID number? I say, yes, I have one. When I look at it, I see it's not the EIN number. So whenever you are registered, because sometimes you can conduct business in different states, and your state ID number sometimes it will not work. It's better to have an EIN number and will not have an estate ID number, because the EIN number can work everywhere. If you don't have a state ID, the EIN number will work on the state ID. But if you only have the state ID, when we talk about federal, like you cannot file your federal taxes with the state ID. You want to put your social security, which is not always good. If you don't want to conduct the business, put your social security anywhere. So the first requirement is that you have to apply with the EIN number. Of course, depending on the type of this type of business you want to register, there are some other requirements, like you have to have the article of incorporation. You have to have some other requirement. But the main one that you have to do is to register your business with the state and also apply for an EIN number. Now, this you have to do it is to keep your book. Keep your book. Keep your book means what? It means tracking your income and expense on the daily basis. Depending on the side, on the type of the business, it could be a requirement. That means you could be fine if they figure out that you don't have that. With some other structure, depending on the size of the business, sometimes it's not a requirement. But as a tax professional, I will always advise you, even though it was not a requirement, you have to actually track your income. Why? Because on the quarterly, you're supposed to make what is called quarterly estimated taxes. If you are making a quarterly estimated taxes, if you don't keep your book, so how do you know the amount of money you're supposed to pay to the state or to the federal as a quarterly estimated taxes? So most of people, what I've been saying is that people will just look at how much they are making for the period, and they just okay, I made $20,000 sales for the first 3 months. Actually, let me see, maybe I can pay 1,000 out of it. You don't pay taxes because estimated taxes is still taxes. You don't pay income taxes based on the sales that you're making. You pay income tax or estimated taxes, whatever you want to put it. You're paying that according to your net Your net is your income minus the expenses. So if you just have an estimate of your sales, because you can see on bank account that you are receiving 14,000 deposit, that is you think that is your profit. If you are making the payment of the tax based on your sales, then you are overpaying, because let's say you have 15,000 income, then you also have 1,000 expenses. For the same quarter in which you want to make a payment, you supposed to use 5,000 as a basis to make that payment, but you are using 15,000 because you see you made the sale for 15,000. So right there, you are overpaid. Okay, and the tax is the only place where you give money to someone, the person will never say thank you to you. You are always, but the government not going to say, okay, thank you for overpaying for your taxes. No, that's the reason why, although it's a requirement, and sometimes it's not a requirement, depending on the size of the business, you have to do that. And it doesn't cost a lot. You can even do it by yourself. You just need to have the tool. So that is a very important thing that every single business, by the way, at the individual's level, like just as an individual taxpayer, you have to do the same thing. Why? Because when you are just sitting your number two, and you go in there to file your taxes, you make $100,000 a year. Now your tax bill is 2,000. You don't even have 2,000 to pay, but you don't have nothing in your bank account. But you made 100,000 a year. Why? Because you didn't trace your income. You didn't know how much you have been spending on. So yes, that's a very important requirement. And that is the best way to save in taxes right there. And you're going to see when we go along doing this webinar. So the next one is that as at year end, what do? You use your income statement to file your taxes, because you have been tracking all your income. You have been tracking all your expenses. Now it's easy. Your tax professional actually has nothing to do, but just taking those income, putting them on the income side, and taking those expenses and put them in the expenses. It's just a matter of how to use the software that we use to actually file your taxes. That is the best way to do it. And you are not afraid of any audit. When you do your taxes or your business that way, you're not afraid. Even though you are taking a $50,000 or $1 million losses, you are confident. But a lot of people are taking losses. If when audits come, the audit is going to take them like sometimes even 3 or 4 years back, because they cannot prove what they have. If you can prove that, oh, this expense, I can show in my book that I made this expense on February 17 when I was going to New York for business. That's normal. If they want to see a supporting document, now they will ask you for the receipt on that day, or your bank account, to highlight that payment from your bank account. So this was a requirement that you guys need to follow if you want to open a business or you want to conduct a business. Depending on the state, it may be slightly different, but this is overall what you need to do. So this is the first part I wanted to share with you. I don't know if there's any question concerning this specific part before I actually jump into the tax planning.
Hello. I have a quick question.
Yes.
All right. So if I decide I don't want to register a business and I obtain as an individual an EIN number, do I have to still follow the same rules, or is there like a separate rule or in terms of registration that I need to do as a sole proprietor if I obtain an EIN?
Okay, give me 1 second. Let me okay, hello, can you hear me?
Yes, we can hear you.
Yeah, can you now repeat your question?
Ask if I decide that I want to set up a business,
Yes.
and I don't want to register an LLC with the state or a corporation, can I do that as an individual, as a sole proprietor, and just obtain an EIN number from the from the from the federal government? And if I do that, do I still have to follow the same requirements of bookkeeping and preparing the income statements to file my taxes with?
Yes, exactly. You need to follow the same requirement. What happened is that, give me 1 second. Yes, what happened is that when you are creating your income, you are registering your income with the state, any state where you are, they're going to ask you how many members do you have in the business. If you are the only member, they're going to register the business the same way. It could be an LLC, and they call it single member LLC. Okay, they will call that single member LLC. You are still subject. You should actually be still be subject to all the requirements. Yes, you can go after the federal government to apply for an EIN number. Yes, to keep your book, because you have the same business, just as if it was 10 persons gathering together to create a business, except that you are what is called single member LLC. And the requirement, I just say that the requirement depending on the type of the entity that you are creating, because we have LLC, we have C corp, we have different type of businesses. Depending on the type of the entity that you are registering, you may have to. It could be a requirement to keep your book. Okay, but even though it's not a requirement, as a LLC, for example, remember LLC, it's not a requirement, but I highly advise people to keep it. Okay, so I don't know if this answers your question.
Yes, thank you very much.
Yeah, that was the only question, right?
Please, if we have any questions, we can type them in the drop box, in the chat box, so Mr. Russell can answer the questions, please.
Okay, I'm going to go ahead with the next part of the webinar.
Sure.
Okay, the next part. Okay, yes. The next part of the webinar is going to be talking, like digging into what is called tax planning. Okay, yeah, everybody has to know what is tax planning. It doesn't matter whether you have a business or no, but if you have a business, it's even more important for you to know what tax planning is. Why? Because the tax planning is actually any action that you take during the year in your personal life or in the course of your business with the intention of saving in taxes and knowing what tax law will allow you to actually take the tax saving. What does that basically mean? It means that you are conducting your business, you are purchasing this, you are using this means of payment because you know why you are using this means of payment. You are actually structuring your business this way. You know why, tax-wise, you are structuring the business this way because you know how it's going to help you tax-wise. I didn't say just to have a business register. Yes, when it comes to LLC, sometimes people just open the business as LLC because they say, oh, they say it's a, it's gonna protect you from any liability on the business. But what about the tax side? How will the LLC help you in the business when you are registering? You know you can register a business as an LLC. A single person can register a business as an LLC. A single person can register a business as a C corp. A single person can also have an S corp or an C corp. I don't want to go into too much details into that, but those are different entity structure depending on what you are planning. What is going to be the level of sales? What will be the involvement in terms of employees and stuff? You need to know which one you're going to take. Okay, so that's the reason why the tax planning is what? It's any action that you take during the year, not right now. I know a lot of people right now are saying, oh, I have my business. How can you help me with my business, save me a lot of taxes? How can my business help me to get more money right now? No, your business is not going to help you make more money right now. By the way, your business can help you making or paying less taxes now. But remember what I said on one of my posts. What you receive today, if you have planned it yesterday, you have received it maybe 5 times more. So that is basically what a tax planning is. Okay, so what do we need to know? By the way, before I continue, I forgot. Over here, this is not a lecture, okay? Because all of us are not accountants. All are not financial advisor. So I don't want to go into too much micro detail because I might get so many people lost. But I'm going to try my best to give you a lot of information that can actually help you to take informed decision. Okay? So yes, so another thing is that all information provided here This is not a consulting, even though some information may look like very quick information you can take and apply. It's not a consulting because you always need to consult with your accountant, with your CPA. You are not my customer, you're not my client. I mean, I'm giving all of this information, share with you as informative only, okay? So now when you take it, you know how to use it with it, okay? But it has to be a lot of information that will help you. So basically, why do we actually have to think about tax strategy? Because tax planning is a tax strategy. We live in an ever-changing landscape. That means the tax law are amended every time, every day, all right? Sometimes more, many times during the year. Yes, tax planning is always changing. Companies, your company or your own company or companies in general, they grow. The net income also change, which has a direct result to the business tax liability. If your business increases, your liability will also increase. You need to accommodate with that, okay? So if you do nothing individually or within your company to allow the new changes, chances are that you are leaving money on the table. You are losing on cash flow. For example, if you are overpaying on estimated taxes, for example, you are overpaying by $1,000, you are actually short, $1,000 short in terms of cash flow, because you have used that $1,000 to pay your customer, maybe to pay your suppliers, for example, or to pay one of the credit card debt that is going to, be missing payment. Any missing payment is not a good thing for you, whether it's at the business level or the individual level. So you might be losing on terms of cash flow. You might be, that means the money will actually be going out of the business. You'll be losing your house. You can lose your house. If you have an issue with the IRS, you can actually go out to lose your house. So there are so many ways that you're going to lose if you actually do nothing about tax planning. Okay, so the business must continually review its overall tax position, similar to how it monitors its competitive position. Every time, that's not for nothing, that every big company here will have a tax department. They will have a director of taxes. They will have a director of sales tax, because they don't want to overpay sales tax to the government or underpay sales tax to the government. They have everything. They're not producing nothing, but they are preventing the company to actually lose money. It's very important, okay? So yes, so what do we have to know here? So the tax to reduce your tax, you need to plan, okay? So no matter how good your tax professionals are, February 15th is not the time for you to actually save in taxes, okay? That is what you guys have to know. And I sing that. It's like a song to me. Every time I go on live, I tell people, especially when I talk tax planning, the tax season is not the time to pay less on taxes or to figure out how to pay less taxes. Why? Because there's a difference between tax preparation and tax planning. Tax preparation is basically a reactive, okay? It's actually a compliance that you have to do. Your tax professional just has to be good enough to do what he's supposed to do to make you compliant, okay? So if you are supposed to receive or to pay 10,000, then he will have you pay the 10,000. It's not the time to say, oh, why is my bill 10,000? Isn't there a way to pay like 5,000? Yeah, you can ask for a payment plan. But the tax planning is a proactive measure, okay? It's what the tax professional look at your individual finance, your business income, your individual income, your business expense, your financial obligation. You look at all of those components of your business now to see what he can do in order for you to pay.
He's muted.
Sorry, I'm receiving a phone call here. So the tax planning is just a way for you to plan to pay less taxes. And if you have a business, you have seen all the components of your business where your tax professional actually has to act to help you. So how long does a tax professional last? Basically, it lasts the whole year because you need to adjust over time, basically. So that your tax planning is not a one-time action that you have to do. So, okay, that's it, I finished with taxes. Okay, I'm good. When you apply now, quarterly or after 6 months, you need to see if there's a changes according to what you planned in the beginning. That is actually an ongoing basis thing, okay? So what are the 3 pillars of saving in taxes on the business side, at the business level? The 3 main way to pay less taxes are structuring, deduction, and credit. So everything that is going to happen that will help you to pay less taxes at the business level. And I'm going to get into the individual level. We see it's actually similar. Okay. So it's deduction structuring. Structuring is what? Everything that you have to do, you have to structure it, whether it's the entity of your business. I just said earlier that you can have LLC, C Corp, S Corp, any type of business you can figure out on the internet. You need, the way you structure can determine how much you will pay in taxes or how much you're going to save in taxes, basically. And it depends on so many things. That's why you have to consult. But I'm telling you what is involved, okay? Structuring, what do you structure? You structure your entity. You can structure your income. Yes, I may get into that, what structure your income is. You can structure your income the way that you pay less taxes, okay? You can structure your expenses the way that you can pay less taxes, basically. Okay, you can structure your business, your expense the way that it looks like a business expense. That is basically what it means. Or you can structure your expense the way that it increase or it decrease your net income today. Okay, you can structure and expense the way that it looks business taxes, even though it's initially like to everybody's eyes and personal expense. Okay, that is what is called structuring. Okay, so the structure of your retirement plan. So you have so many types of retirement plan. Which retirement plan you pick can determine how much you can save. And you have so many retirement plans. Okay, so structure is a really big thing when it comes to save taxes at the business level. Then you have deduction. Okay, deduction is basically everything that you can take out of your income. Those are the first of all, you structure it. Now, when you finish structuring, it will give you the deduction you need. Okay, it gives you in one side the deduction, it gives you in the other side the credit. Structuring also means you want to purchase a car. The type of the car, for example, you want to purchase can actually give you a tax credit. If you, for example, you use what is called environment-friendly car, you can have a credit for that. A lot of people don't know. Or if you make some type of repair in your, in your business, your business actually owns a property, or you own the property where your business actually is conducting the operation. You can have credit because of the type of repair that you are doing there. So there are so many things. Okay, there are what is called, for example, R&D. R&D is what is called research and development, and that is what helps among many other credit that helps Amazon to pay $0 on income tax on the last tax season. And I'm going to show you a couple of those. Amazon actually takes hundreds of millions of on net operating loss carry over, and I'm going to explain what carry over is when I get to the impact of the CARES Act into you guys' business operation. The carryover is a big thing when you conduct a business. So Amazon took around like hundreds million, and Amazon has like 1.1 billion on deduction. So Amazon actually took a lot of deduction, and they have 11 billion profit, but they didn't pay no taxes on it. I have a full 45 to 1 hour webinar only on this. I just want to let you know that the tax credit is a big thing when you have a business. Okay, so I'm done right here at the business tax planning. If you have a question at the business level, I can address those before I move into the individual, because as a business owner, you are also an individual, right? Because you are acting on the business level to save tax. You can also act on the individual level to plan to save tax. So what is inside the individual tax planning? That is what we're going to see after the 2 minutes if you have few questions to address.
So do we have is anyone here present that has a question? You can go ahead and unmute yourself and ask the question.
Yes, the person can unmute himself and ask a question. And I really want you to ask a question because sometimes I receive individual question. Somebody has a question. Can you guys read it for me, please? Somebody just type a question.
Okay, I'm not seeing the question yet. So hold on, I'm gonna open this up. Not on my stream. I'm not seeing any questions here, but I have a question. Rosalind, you're muted yourself. You have a question?
Yeah, I was going to ask a question, so I wanted you to read first. Hi, Mr. Russell. Sorry, I got in the middle of it. You might have lost me in some type of way, but I'm just going to go back a little bit. Can you give me a little bit of an example when you talk about structuring? Like, what do you, like, give me like a typical example. I know like you touched on buying a car, like kind of in the business setting, like when you mean structuring, what are you talking about? Like, because I kind of got lost in the middle of it.
Okay, yes. When it comes to structuring, I posted in my Facebook page 2 days ago how you can pay maybe zero taxes as a C corp. Why? How do you do that? A lot of people are going to be doing LLC, right? Even a single person can create a C corp. Imagine that you have $100,000 gross sales. Okay, if you are filing yourself, you are filing your taxes as an LLC, chances are that you may pay more income than if you were filing your taxes as an LLC. Why? Because at the LLC, you can actually come up and say, hey, I see I have $25,000 net income right here, but I'm actually planning to, open the new store over there in downtown. So I don't want to distribute my income. On the LLC, you cannot say that I don't want to distribute my income because it's your income. You're going to pay tax on it. On the C Corp, for example, if you are structured your business as a C Corp, you can say this 20,000, you say to yourself, I'm not paying taxes on it. How? I'm going to say to the government that I'm going to reinvest it in my company. You see that $25,000, if it goes into your you see that $25,000. If it goes straight to your income, you don't even know what is your tax bracket. Maybe if your tax bracket is 10%, which is the lower tax bracket, then you're going to pay 10% of that $25,000, which is I think was $1,500, right? Imagine you are on the 20% tax bracket because if you have other source of income, and then the 25,000 fall into the tax bracket that is at 20% or 25%, you are paying even more and more on taxes on it. Imagine that you actually decide to reinvest. You don't distribute it. When you have a corporation, at the end, you can distribute the dividend to all the shareholders, or you can decide to actually reinvest it. But if you are yourself, you decide to reinvest it, then you're not paying taxes. It's not like tomorrow you're gonna pay tax on it next year. No. The money, because actually if they give it to you, you will still want to invest in your business, right? That is a single example of structuring when I was talking about structuring. And there are many other examples, okay? There are many other examples. One example is what structure. I'm going to tell you about structuring and expense. There is this realtor who purchased a yacht. We see over here 1 million yachts. This person purchased a yacht because she's making a lot of money. And she took it on her taxes. The IRS say you cannot take it because you purchased it for pleasure, right? So now they consult with a tax professional who knows the things. And he was able to structure the same personal expense because, if you have money, you can purchase an airplane, right? So they were able to structure that same $1 million yacht the way that it was able to be categorized as a business expense. I just gave you two things. I don't want to go into too much detail to explain that. The lady was saying that the people that she wanted to target, there are people really wanted that to looks like she's a kind of person she can take business to them. She needs to have that yacht. to go after them. So she was able to actually bring it back as a business expense. You see what structure it is?
I get you. Yeah, I get what
I
you're
have a quick follow-up question on that. In terms of expenses, so now, most of us are small business owners, and we're probably just starting out our businesses. And
No,
so
I cannot hear you.
Can you hear me now?
I don't know if you can hear me, but I can hear you.
Oh, you can. I can hear you.
Hello?
I can hear you. Can you hear me now? Can you hear me now?
Okay, yeah, I can hear you.
Okay, good. I said a follow-up question to that. For most of us who are small business owners and we're probably just starting out our businesses and we're investing, say about $10,000 into our business, or even less. And as a setting up a new business, you're probably starting out and buying equipment like a printer, a computer. So those are considered expenses. But in terms of structuring, if I decide that I want to buy a car for my business, so is that coming in as an expense, or is that coming in as, so where does that come in? If I decide that, okay, I'm going to buy a vehicle for my business, would that be categorized as an expense?
If you want to purchase a vehicle for yourself, you have to know, are you purchasing a vehicle for yourself, or you purchasing a vehicle for your business? If you are purchasing the business for yourself, yes, it's an expense. There's no doubt about that. You just register the business under the business name. Now, those are going to be called startup costs. You can be in the need of purchasing equipment, all of those, even though you're not making sense, even though you haven't even registered the business. That's what people don't know. Sometimes you can have what is called organization costs. That means you have not even registered your business, but you're already incurring expenses. The first thing is to record, always record. If you are thinking that in the next 2 years, I'm going to do this. I'm doing this because the next 2 years I've been doing this in my business. Start recording those. If at the end it's really related to the business that you are conducting, then it will be considered as a business expense. The business expense is not always when you're already registered business. No, you can have pre-organization or startup cost that actually comes before you even officially register the business. So your car, if you want to get the car and you want to put the car in under your name, you can still do that, and you can still take business expense out of your car. How? I think I talked to you, Tyre, that you can actually track the mileage. Whenever you're driving the car for business purpose, you can figure, there's a way that we can actually answer the price to charge the mileage. If you're a real estate, you're a realtor, and then you drive cars and house to house. And then sometimes you go to your boyfriend or girlfriend, to your mom. That's not business expense. So that mileage doesn't count. There's a way to charge that. So basically, a car could be considered as a business expense, as it could also be considered as a personal expense. But if you haven't registered the business yet, you can still take it, and you can actually depreciate the car over time.
Okay. All right. We have one question. Thank you so much, Russell. The question here is, can you deduct cost of heavy duty equipment, non-household, from personal income tax? And if your LLC is dormant, will you be tax liable? If you have a dormant LLC, probably an LLC that's registered and you haven't, so 2 questions. So the first question is, can you deduct the cost of heavy duty equipment, non-household, from your personal income tax? And for an LLC that is dormant, do you have any tax liability?
I said that at the beginning. Everything that you do, that is in the normal way of doing your business, and you are doing it because of your business. If it's an expense, then it's a business expense. Now, when it comes to liability, the liability basically means that you have made more income than expenses. So over there, you don't have to pay no taxes. By the way, it's a loss. If it's a heavy equipment, that is really because according to the tax code, you should take the, or you can take the whole thing. Yes, you can take it even though you make zero taxable income, and you can still file your tax just as a loss. Amazon, that you know now as the biggest company in the world, Amazon has been incurring loss for years. And that is why you saw over here, that's why you see over here, millions of dollars net operating loss. Every time you have a business and that you are incurring loss because you are spending more than you are making money, it's called net operating loss. And I'm going to show you what the tax law or the CARES Act actually has, what the CARES Act has for that, basically to help you to take those losses. Like you are, because when you're making these losses, sometimes you are going to make profit. There should be a way that the day you make profit, you take care of those losses you are making in the past. Okay? And the key is to track your expenses. Amazon is taking 100 million. It's not just going to take 100 million just from, you know, from working off of the bed and tell his accountant, oh, you guys take 1 million of losses for me. No. Net operating loss. I'm going to tell you what it means. No, because everything is documented. If you are going to purchase this, you are going to New York, you are traveling for your business. Of course, you have to consult to, you can actually structure your travel, whenever you are moving, you can actually structure even a private visit into a business. But you have to consult to know how to do it. Yes, you can go to New York to visit your family, but you can make it a business trip. And then everything, the hotel that you come with New York, the restaurant you go to, everything you go over there could becomes business expense. Okay, there are some type of requirement that you have to do, but if you can make it, that's
all right. So we have one more question. So my understanding now is that you can definitely deduct the heavy duty equipment. There are pre-operational cost of doing your business for the LLC for this person that is asking this question. So if you do not have any activity on an LLC, you've registered maybe a year or 2 years, you're not liable for any taxes until you're able to show the government what you've done. Thank you so much, Russell. Yeah. And the other question we have here, sorry, go ahead, please.
You can actually, even though you have no money, so what people do is that because they didn't make income, they're not filing taxes. Not filing taxes is a penalty. You are against the law. You are violating the law. Tax is not to make money or pay money. It's a compliance. Okay, because your LLCs were dormant doesn't mean you're not going. If you don't want it no more, go meet with a CPA, file a termination. Terminate your LLC the way you create. You can also terminate it. Okay, but if you leave it, the government, you are the one to know you're not making money. The government can come after you to say, oh, you owe me $100,000 because you're not in your pocket to say, oh, I didn't even make money with that business. No, you are the only one to know. So file your taxes and show $0 income. It's a compliance. It's not that you file your taxes because you're making money. No.
All right, thank you so much. One last question here. It says, Russell, I really don't know anything about taxes, but I have a question. I'm a new LLC business owner. I also work in healthcare. Now it's almost time to file taxes. My question is, am I going to file for one-time taxes, including my job and my business together, or I have to file my job separately and my business separately? So I think this person is trying to find out, for the LLC they just started, I think they'll probably have a W-2 coming from their workplace. Yes. So they want to know if they should file their taxes separate or they need to combine it.
Okay, now filing your taxes separately or combined with your normal entry tax depends on the size of the members of your business, or also it depends on the type of the entity. So you just say it's an LLC, so I know the entity type, right? Now I have to know if there are many members of LLC in your many members in your LLC. That means if it's made up of 2 or 3 partners. Okay. If there are 3 partners or 2 partners, you have to file the business separately. Okay, if you have 2 members, if there are 2 people gathering together, 50% each of the share of the company, then you have to file your business. You have to file the form that is called 1065. Okay, you have to file the 1065. That is going to be business taxes for your business. Now, on the healthcare side, you will have, of course, the normal tax injury tax that you used to do when you receive your W-2. But what is going to happen is that the result that you're going to get from the business, I just told you that when you have an LLC, whatever profit that you have at the end of the year in your business is going to be added at the individual side. So let's say you made 80,000 grants on your healthcare on the W-2. Now, the net income on your business side is 10,000. Then your base 80,000 plus 10,000, the profit from your LLC. Okay, so legally you have to file two different separately. But if it's a one person, what is called single member LLC, what you have to do is basically what you have to do is basically combine everything into your individual side. And in your individual side, we're going to report the income and expense in what they call Schedule C. So you're going to file one taxes. Inside the one taxes, you're going to have the report of your W-2 income, and other way, you're also going to have the report of the net operation of your business. If you didn't make money, then it's going to be a loss. You can also take that loss against the 80,000 that you made. That means if the loss was 10,000 loss, you can take that 10,000 loss against the $80,000 that you made from your normal job.
Thank you very much. Do we have any other questions?
It's just a follow-up question to what he just said. So my question to you, Mr. Russell, is if, for example, that I say I'm already filing my taxes as married, so it's two people already, and then I have an LLC and my second member is also my spouse. So, I mean, can I still file it all together as one, or do I have to file my company? Oh, we will have to file it differently. What is your take on that?
Yeah, you will file separately. An LLC, when you register the LLC, when you register, you apply for your EIN number. They don't see your partner is your wife or your brother. They see as a multi-member LLC.
Right.
And by law, they will prescribe you to file the 1065 for the business. Okay, they're going to prescribe. They don't know who is your partner. Okay, yes, you are going to file separately. At the end, you're going to get the result of the net activity of your LLC. If the result is like, let's say 10,000, they're going to split it in half. You're going to receive 5,000 of that. Your spouse is going to receive the other 5,000. Because it may happen that you guys are not 5,000 together. So everyone has to have his fair share, whether it's a profit or the loss. Okay, everyone has to have his fair share of the result of your taxes. Basically, that's what it means. Now, if you are fine together, okay, you're going to put the K, I think it's a K12, or I forget the name of the form. So you're going to find that form in your taxes to show how much income you have got from your, how much net income you have got from your business. Yeah, basically, yeah.
Okay.
Thank you very much.
Okay. So I'm going to move very quick to go into the individual side now, so you guys can know what you have available to you at the individual level. We are talking about individual and our business right now. Now, right about at the individual level. Okay. So, now, what is individual taxes? In the first place, it's basically the art of organizing and structuring. You see, structuring comes back. Structuring your ongoing daily living financially, the way that's postpone or avoid taxes. Yes. Everything that you do individually, if you're going to see at the individual level, what can you do to postpone or avoid taxes, right? Yeah, that is basically what at the individual level, what do you do? How do you structure? Structuring is the main key, it's the key. That's why they will say, anytime that something happened in your life, I think we have that in the next slide. Okay, yeah. Because over here, we still live in the environment where almost everything we do have tax consequences, right? So not thinking about tax implication when paying for tuition, for example. If you are paying for tuition, I see that a lot. People are coming to fight taxes with us. Oh, I paid $20,000 for my own because I was taking an MBA. I paid $40,000 this year. So did you consult with your taxes to see how you can structure that expense? The way that you can help you with your tax. If you didn't do it, then there's so many limitations of what you can take out of those $40,000 that you spend. But what about if I tell you that there were a way that you can take the whole $40,000 in 1 year? So basically, people are sometimes saying you are losing more than what you think you are saving when you don't consult with the tax professional. Especially when there are so many life events. A life event is when you have to go to school because that's such a sacrifice. You have to spend $40,000. Life events, you want to purchase a house, right? You have to buy a new car. You have to whenever you do a big thing, you have to apply for retirement. When you have to do all of that, you need to know how can you structure that the way that it will help you tax-wise. Okay, so doing nothing about that is a problem if you don't do nothing. So do nothing about it is just like throwing money out of the window. And you know, people are out there, instead of throwing money out, it's better to go and give it to a charitable organization if you don't know what to do with the money you have saved by consulting with the tax professional and saving money. Okay, so now think tax whenever you want to do something that involves spending. Okay, because the first place you save on taxes is when you spend. You don't save on taxes because you make more money. People that save on tax because they hide the income. You make, $50,000. Now you only show $40,000. You're not saving tax. You are defaulting the government basically. If they can catch you, you are in big trouble, and you are actually losing. Then you think you are winning. Why? Because actually we are on the way that we have what is called PPP and EIDL. They are giving you money on the EIDL depending on how much is your sales. So if your sales were 50,000, you only claim 25,000, then you're going to have half of what you should have received if you have claimed the 80,000, the 50,000. Claiming 50,000 doesn't mean you're gonna pay twice taxes. That is also the misconception that people have. Paying like you claim the whole 50,000, it doesn't mean that you're going to pay more. Why? Because if you are tracking your expense, you can also come up with maybe 49,000 expense. That means you are only paying taxes on 1,000. But they can still see that your business is worth $50,000. And then even though you need to apply for a business credit card, you are more likely to receive to be approved for more line of credit than somebody will show a financial statement or taxes with a $25,000 taxes on it, income on it. So that is basically what you guys have to know. Now, when it comes to what the four main pillars of tax planning are, again, deduction, tax credit, and timing. Okay, and of course, retirement, entity retirement account, IRA. So basically, what is deduction? Deduction is basically everything that is going to do to you, basically, because we're not talking about the business side. We're talking about the business side whenever you are spending money with the intention to better conduct your business. Now it's at the individual side. At the individual side, you have a lot of deduction that you can take. Okay, a few of them. I'm not going to list everything. You have work-related deduction. For example, if you are working from home, then you can take a work-related deduction because you are working. You are also using your house. If you are working for somebody, okay, for a company, the company has you working from your house. If the company doesn't reimburse you for using your internet, for using your, for using your cable bill, for using all of those, you can take those deductions by law in your taxes. Okay, so that is what is called work-related expenses. If you are moving because of the business, because okay, I'm spending too much money on car, on gas. If I move now, my new house is very close to my job. Now I'm saving. You are moving because of the car, because of the job. If you are doing something for the company, And in general speaking, you are doing something for the company. Maybe the company sends you to, I don't know, to go and drop a package at the post office. They don't pay you for the taxi, right? You call Uber. They don't pay you that. You can take it in your taxes. Those are what is called work-related deduction. But you have to consider, because a lot of them have been receiving a lot of restriction. Okay, so you have itemized deduction. We are in the deduction here. Itemized deduction is, for example, property tax. Property tax, real estate tax. Property tax is whenever you purchase something, a property, okay, a physical product, and you have to pay tax on it. For example, when you are paying registration for your car, then you are paying taxes on it. You can take that as an itemized deduction. You have real estate. Whenever you are paying something on the real estate that you have, that is not for business, you can take those taxes. Okay, those are deductions. You have charitable deduction. You have so many things. Okay, you have mortgage interest, home mortgage interest. That means if you use your house to borrow money, and the interest on that money, it could be 100% deductible. Compared to your credit card, the interest you pay on your credit card is not deductible, but the interest of the money you can receive from your house, because you own your house, all those interests are deductible. Okay, even the interest on the house itself, when you pay your mortgage, you have to pay interest on it. Those interests are deductible. If you borrow money because of your, you can have money secured by your house. You pay interest on it. Those are, so there are so many deductions you can take. You have healthcare deduction. Okay, if you are taking care of your children or yourself or your wife, yes, you can take those healthcare deductions. So you have so many deductions that you can take. Now, besides deduction, you also have credit. You have family dependent tax credit. You have income and saving credit. You have homeowner credit. You have healthcare credit. You have education. So I'm not going to go into all of that, because we have seminary, webinar, paid webinar by the way, where we are explaining all of those in detail, but you can actually read what is on there. There are so many tax credits that you have to take. So your tax professional can tell you what credit he was able to take for you. And that is how he came up with your refund that you have, okay? So the next thing is the timing. The timing is more like the structuring, okay, on the individual side. The timing is more like structuring on the individual side, okay? Typically, it's better to defer taxes, okay? Defer income to next year if you believe income will be lower. What does that mean? It means if you're going to have $100,000 this year, and you are planning that you will have only $50,000 next year, maybe because you go to school, you will not be working too much. That means you will only receive $50,000. This year is $100,000. If there is a way to defer income from this year to next year, you can do it. And there are so many ways to defer income. Yes, there are so many ways to defer income. That means if you defer $25,000 from this year to the next, that means they will only consider $75,000 for this year. And next year, they will also consider $75,000. But the truth is that we don't know what's going to happen next year. Next year, the tax will actually be lower. You know what is now, but most of the time, the tax changes because they want to, help business owner or taxpayers. That means it may actually go lower. That's the reason why, whenever it's possible, defer taxes when you can, or you can also accelerate deductible expenses into current year to beat the standard deduction threshold. Okay? Yeah, sometimes we can do that. We can accelerate deduction to have deduction right now, but it depends. You have to actually look into so many components. So, but if you think you will be in the higher tax bracket next year, consider taking the opposite approach. I mean, accelerate the income. I mean, bring all the income this year and defer the deductible expense next year. It's a little bit technical, okay? But the timing is important when you have to deal with this tax thing. So the last thing is use the individual individual retirement account. The retirement account just allows you to actually put money into your saving account. And depending on which retirement account you have, there is a limitation of how much you can put on it to avoid paying taxes the current year when you are actually doing this. Yeah. So that's the takeaway basically when it comes to income taxes. We have four main a way to save taxes or to pay less taxes, tax deduction, tax credit, timing, individual retirement account. So the question I have to you is that which of these tax deduction and credit do you usually take? That's the question I always ask. Which of these tax credit do you usually take? Which one you you didn't know about? Okay, let me know what you think. So who can answer this question?
All right, I think I'll go first. So normally for my personal taxes, of course, my property, I take out the deductions for my house, on the mortgage side, property taxes. Then of course, for my business, I take out the equipment, uh, um, bills, transportation, entertainment. I normally would do those deductions. But I have a quick question before someone else jumps in.
Okay.
On the individual retirement accounts, how does that work? Can you just throw more light on that a little bit, please?
Okay. There are different type of retirement account. Okay. Depending on if you are an individual or you are a business. As an individual, you are tend to use what is called IRA. Okay, the IRA will basically postpone the tax on the money that you are putting into the retirement account. If you are putting, let's say $10,000 into your retirement account, and your gross income was 100,000, then they will not consider the 10,000 because you put in your retirement account. It's actually delayed your taxes. It's normally meant for you. You will pay taxes on it when you will get that money out of the retirement account. So it's a tax deferment. But you also have what is called Roth IRA. The Roth IRA play as an opposite. You put in the retirement account, but you still pay tax on it. But the day you get the money back, you don't pay taxes on it. So there are so many type of retirement accounts. Now on the individual side, you also have what is called 401k. The 401k, whenever you contribute for 401k, it gives you tax. It's a like tax credit or tax saving, but it's a deferment. Okay, it helps you. But I just say that whenever you can defer your tax, because there might be a provision that we say, okay, you know what, we're not going to pay tax on the money into your 401k, for example. Right? It may happen because the Tax Act has actually an implication on those retirement accounts that people have. And I'm going to jump into this in the next 2 minutes to show you one of the consequences, positive consequences of the CARES Act on the retirement account. Because it's there, they wanted people to be able to use it and do not feel the world, do not feel that it's heavy, that they are paying too much taxes on it. Yes. So that is basically what you can do.
All right, thank you.
Hello?
Do we have any other questions? Does anyone have any questions?
I have a question. This is Caroline. Can you hear me?
Yes.
Okay. I was one of those that took something out of the IRA because I had no choice. Well, you lose your job and you got to pay bills. So at some point I did take that out, but at the time when I took it out, I believe it was due to the COVID. So I'm trying to remember whether there's certain things they didn't require for me to do. But obviously what I did was I made sure that my taxes were taken out. So when I do receive it, I should be able to be okay because I paid the taxes on it, correct? Because they removed taxes on it.
Yes, you should be okay. But what I want you to know is that you have saved something on it. You know what you have saved?
What?
You have saved, if they charge, you should go there and get it back. You have saved what is called the early withdrawal penalty.
Okay.
Because of the COVID, that is one of the provisions on the 12, let me share this with you. Over here, you see this thing? The 11th provision, the 11th provision that any business needs to know. So one of those provisions was that if somebody goes into your retirement account because he's out of money, he's not working, he gets his money back. Up to $100,000, you should not charge them penalty. The penalty is when you withdraw your money before the date that you're supposed to withdraw your money. Whenever you put money into a retirement account, you should withdraw it at a certain age, which is 65 years, I think. So if you get the money out before, I'm not talking about taxes, I'm talking about penalty. If they charge you penalty because you took your money back, you will have to go after them and say, okay, your CPA told you that they were not supposed to charge you the 10% penalty, because that is one of the provisions within the CARES Act. And sometimes those companies will do that because they know that you don't know. And this happened with me. With one of my customers. He was doing business, you know. He was out of cash. He said, you know what? This is an opportunity, okay, to go back there and get your money 10% off. That is a lot of saving. Okay, yes.
Okay, I'll definitely do that. Thank you.
So any other question? No. So yeah, I'm going to just go very quick on this, on the CARES Act, because you guys need to know that the CARES Act is there and is actually there to help business owners. And I'm so frustrated sometimes to know that some people are not even aware of it, or some people are aware of it, but they don't know that it applies to them. Okay? They don't know what it applies to them. So what we're going to share to go very quick here is to see 11 elements. I'm going to just introduce them to let you know what was actually available for you guys to take advantage of. And you are lucky because all of these things were supposed to expire on December. And I have been conducting this. This is a 1 hour, 30-minute webinar on this only. When I'm explaining to people everything available by the CARES Act that can help you save in taxes, okay, or get more cash, basically, okay. What you have to know is that the CARES Act opportunity, the first thing that they have over there was the stimulus package. The stimulus package over here was allowing people, and by the way, they have a new stimulus package where they were giving people $600. When we conduct this thing, it was only $12,000, $1,200 that was given to people. The first stimulus, this was conducted on the month of March, April 2020. So we have done this webinar on April 2020, and you see our price today now. Okay, so what I was saying is that if you didn't receive your money, I'm saying people know that now, but we run this webinar on April where we are telling people that when you come here, we will tell you how you will do to get your money, your stimulus, if you didn't receive it. Okay, so one of the provisions was telling them that if you don't receive your stimulus, basically they will put you into your taxes. It's only now that people know because it's a tax season. Okay, so basically we are saying that the unemployment and tax implication. Yes, of course, they were giving enough money to people as unemployment, and the tax implication on the unemployment, yes, is that the unemployment should not have a basic and an impact in your life, tax-wise. Some people will be like, oh, do you really think the unemployment is going to affect me? Going to affect my immigration status? No, the unemployment doesn't have no effect on your immigration status because it's not a favor, it's not a welfare when you get unemployment. If it's established that you're not working because of the COVID, then you are entitled to it. But now, what people don't even know, now some people know it, but majority of people don't know is that if you didn't take the unemployment, you are a business owner because sometimes you cannot prove that you are unemployed, right? You are a business owner, just that your business is not working. If you didn't take the unemployment and you were not operating your business, then you are entitled to take that unemployment in your taxes. Who here knew that? That you can actually take those unemployment. It's like 500 a day, like up to 10 days, $5,000. That is what people were supposed to discover. That means the people who assist to this meeting right now are going to know about this. People I was disclosing this to people who were attending that meeting, that webinar. it was conducted, it's actually a paid webinar. So we were telling people that if you didn't get unemployment, how do you do? What is the disposition of the law that actually allow you to take it? Okay, this is what we explained on the 1 hour, 30-minute webinar. So there's a lot here that you guys need to know. You have to whenever there's something that is voted, is adopted by the Senate, and it has tax implication, you have to know. So the PPP and EIDL, of course, those are the law that was voted to give money to business owner. And I used to say that everybody is eligible. Basically, everybody. On the first one, everybody was eligible as long as you were in business before February 15. Okay, everyone was eligible. And now there's the first.
Can you unmute yourself, please?
The first one was over by December 31st. Now they're replenishing the PPP and EIDL, but they came up with some condition. And that's the only thing people need to know right now. Why? Because if you don't fulfill that requirement and you are able to get around and even get the money, then you may be in trouble later on tomorrow. Okay? It's what? It's that you have to prove that your business has financially suffered. That is what you need to demonstrate before you actually get the unemployment today. I mean, not the unemployment, the PPP and the EIDL. You have to show that, hey, my business has suffered by 25% when it comes to PPP and by 30% at least when it comes to EIDL. How do you show that? If you are a business owner, a normal business owner, you have been keeping your book, you will just need to go there and print your financial report. You will print your 12-month report because they have to compare month to month to see how your business was working before COVID. That means COVID also included 2019. Before it also go up to 2019, and how your business performing during the COVID and after the COVID. Now, if they can see the discrepancy, if your financial statement can show a discrepancy, like a deduction, a reduction, a decrease of your activity, of your income by at least 25%, then you will be eligible. So what does that mean? It means that you have to, in somehow, create your financial statement. If you don't have any financial statement, you have to consult with a CPA that will actually require you to provide some information for him to create those financial statements that you will actually use as a basis to be eligible. You are eligible because you are in business, right? Now, in order to get this money, and what do they have? Now, in the PPP, they give the money depending on your net profit. On the EIDL, they give you what is called 10,000 advance grant. That means just by applying, you are eligible for 10,000 grant. Depending on whether you will be approved for 20,000, 40,000, 100,000, depending on, regardless to how much you are approved for. I told you earlier that the EIDL gives you money, gives you a loan based on how high is your gross sales, basically. It's not about how much profit you're making, how much is your gross sales. So they will give you money. The higher your gross sales, it also means the higher your gross profit and the higher your eligible amount. So beside that, they give you 10,000 grant. The grant is actually what you don't pay back, okay? So there were so many, there's an impact on the payroll. So I'm not going to explain it. I'm just letting you know that there's a big implication on the payroll for the people who have employees, okay? And on the estimated tax payment, there's a big impact on the estimated tax payment for the people who are supposed to make estimated tax payment. So there are so many tax implications. Now, the net operating loss, I want to talk about this because it's really important, okay? Everything is important, but because we saw that net operating loss on the Amazon side, I want to touch a little bit into this one. Net operating loss means what? It means that if you have made losses, you have made profit this year, you made $100,000 profit this year, but you have been making a lot of losses. You can actually take that $100,000 profit and put it against all the loss you have been having. Let's say you have $100,000 profit this year, but last year you made $10,000 loss. You will take the $100,000 profit you take it back. You take the net operating loss, carry back. You go back, you take the loss that you have last year, and you still have now $90,000. You can also go to 2 years from now. The 2 years from now, which was basically 2018, you take the loss. You can take it up to 5 years back. They call it carry back. And they also have what is called carry forward. The carry forward will allow you to be able to take the remaining. If you, out of the $100,000 that you have now, you have like you are able to write off up to $70,000. You only have $30,000 profit left. That is where you're going to pay taxes. You can also take it to next year. So basically, the net operating loss, what you were saying, no, I explained it backward. Net operating loss means what? If you have a loss this year, that's what I mean. If you have a loss of $100,000 now, so that loss, you can take the loss and apply it to the gain, the profit that you made last year. So last year, you made $10,000 profit. So you paid taxes last year on the $10,000, but this year you have $100,000 loss. Okay, you take 10,000 out of the loss. You're going to apply it to the last year profit. That means your last year profit is canceled. Now you don't have to pay taxes if it's canceled. That means the tax that you paid last year could be paid back to you. That's what it means. Net operating loss. That means you have $100,000 loss today. You take 10,000, you send it to last year. You're gonna cancel the 10,000 profit that you made last year. And you can go to 2 years from now. So you can go and cancel all the profit that you made in the past up to 5 years. Okay? That means you will get a lot of refund for each of these years. That is what is called net operating loss. So any business owner should be able to know that a big loss, because they know that a lot of people are going to incur loss this year. If you have a big loss now, did you have a profit last year? Yes, this loss is going to reduce the profit that you have last year, and it will make you receive a refund, more refund from last year and to up to 5 years back. And you can actually also carry forward. That means next year, the loss that you have here is going to help you to also pay less taxes next year. So this is what I really want to touch, okay? So I'm not going to talk about all the rest. Everything I want you to know is that you need to act, okay? You need to take action whenever you see something going on, because ask yourself, what's the tax implication of what we are doing right now? If you don't know, consult, ask for a 15-minute, 30-minute consultation, because you're going to learn a lot. Okay, yes. So this was everything I want to share with you guys. And the last thing I want to let you know is that the only way to get different results is to do things differently. Yeah.
All right. Thank you so much, Russell. We so appreciate you coming to take this class with us today. I know that most of these classes, people have to pay for them. So you coming to impact our community with a lot of knowledge. We are very happy, and we appreciate you. It's good to have one of our own that knows these things and can speak our language, our lingua. So thank you so much. If we have any questions, please, you can unmute yourself and ask the questions.
Yes.
I have one quick question before anyone can quickly go. I was talking to an individual regarding the PPP, and their issue with applying for it was that they felt that they had a W-2, and their business taxes, they had an S corporation, and the Schedule C was included in their personal taxes. So they couldn't figure out how much exactly was their gross revenue for 2020. They couldn't figure out how much they should calculate. So should they take just the amount in the Schedule C, or should they use the gross income with the amount they were receiving in their W-2s from their employment and add it to the Schedule C? So I don't know if you can quickly answer that question.
Okay. The person is working for an S Corp. That's what you're saying?
Yes. So the person owns an S corporation and also
Okay.
is working for a company. So when
For
they
the same S
so
corp.
two different entities.
Okay.
So receiving a W-2 on one, and
Mhm.
personally filing taxes on the S corporation, which belonged to them. So both incomes was put together in their personal taxes. I think the Schedule C, you mentioned that earlier, and their W-2 was combined in their personal taxes. So they want to know, for applying for the assistance, what income should they use in applying for the assistance?
Okay.
Just business income or the income they also receive from their employer?
Now, whenever it comes to the PPP, it doesn't matter whether you have a job or no. What you consider is the business activity. So they are going to consider the income from the business, from the S corp, not the income coming from the W-2. No, you cannot take those because those are not part of your business income. Yeah.
All right, thank you so much.
Mhm. Somebody else has a question. He typed over there that he has two questions. You can unmute yourself and talk.
Exactly.
I think he typed the question.
First, would like to know how my retirement account 401k can influence my taxes.
Okay. I think the retirement account influence your taxes, the 401k especially. And I said that earlier, in the way that all the money that you are contributing into your retirement account, those money are actually tax deferred. Let's don't say tax free because there are so many area where you can have tax free. I just told you that you can decide to structure the expense, the money that you pay for your education, the way that it will be tax free. Tax free means that if your school costs you $40,000 and you make $100,000, they will only consider 60,000. That means 40,000 will be tax free. But on the retirement account, the money that you put in your retirement account is tax deferred. That means you don't pay tax on it today. Okay, you don't have to pay tax on it. But the good thing is that maybe this year you need money from your retirement account, so you can go get that money penalty free. Let's call it like that. You can get the money penalty free. You can also get the money tax free if you're going to put it back in your retirement account. It's just like the interest free loan that you take. Okay, if you took money out of retirement account, at the end of the year, you can actually go and put it back. So the Tax Act has a provision that allows you to go back and split even that money into 2 years and put 50% of the money into your taxes this year, and next year put another 50%. They don't even charge you for the tax that they were charged on. That's basically what I wanted to know. So yes, over here you have to file it separately. You have to file separately.
All right, thank you so much. All right, so another question we have is, can I claim or deduct online store fees? Online store fees, can I claim?
Of course, as long as you document it, as long as you document it. Documenting means that you have a record where you are pulling whenever you are charged that expense. Maybe it's a spreadsheet, it's a report, print them out, put it into the report, and the daily, the way that if they ask you, okay, what did you take? You can actually print your report. You say, okay, this day I have incurred this expense. This day, you can actually print out something and give it to the taxpayer, to the IRS audit in case you are audited. Yeah, it's a business expense basically. If you spend it because you want to conduct your business, then it's a business expense. Yeah.
I will please advise everyone, every business owner, to please, if you don't have an accounting software you're using, you can download a spreadsheet and just itemize each expense that you know will come into your business. And please just record it, because most times, like Mr. Russell has said, we tend to wait during tax time. I'm guilty of that as well. When it's January, I start thinking, oh my God, where are all my receipts? In documenting it, especially in this age and day, if you have, say, for example, a receipt that was sent to, maybe you have an Amazon store, an eBay store, and you get those receipts that are emailed to you, please just create a folder in your system and save it. And as you're doing that, take that amount and put it on the spreadsheet. So at the end of the year or the beginning of the year, when you need to file your taxes, you have a spreadsheet and you have a document that you can pull out and just have all those documents in place. It's very essential for our business because we tend to pull money out as small business owners, most times from our personal accounts. That is not a good idea. Please invest invest your time and start a business account. Open a business account and run all of that through your business account, separate from your personal accounts. So that way, if you print out your statements from your bank, if you have a business account and you're probably paying an online store fees, like the question that was asked, you're swiping you're using your debit card to make that process. It'll be on your statement. And at the beginning of the year, when you file your taxes, you just print it out. And trust me, the bank already would categorize all your expenses for you already. And you can actually even go on, some banks actually have softwares on there that allows you to separate all these expenses. So let's try and do that so that at the beginning of the tax year, we are ready. We are not harassing our tax experts and trying to tell them, asking them what we should do. We should also be ready, be prepared, for the tax season. So that's my little advice. And I'll go to the next question. Says, how can my student loan and education expenses influence my taxes? How can my student loan and education expenses influence my taxes?
The student loan, basically, when you pay student loan, it's a tax deduction. Okay, basically, if you pay, if you don't pay, it stays there. But if you pay student loan, you have to get the report. You should actually be able to get the report. I don't know which organization that issued that report. You give it to your tax professional, which is going to basically account for it, to take that interest or student loan interest that you pay. Yes, basically it has a positive impact if you pay your student loan debt. Yeah.
Okay, thank you so much, Russell. Another question here, is there a limit to what I should claim my school loan after graduation? I think the time limit.
No, I don't think so. No, I'm not aware of any limitation. I mean, I know people who have been carrying the student loan for years and for decades. So whenever you pay for it, you take advantage of it. Yes, this is basically how it works. No, there's no limitation as long as you still carry the balance on your student loan. If you pay something, you have to get the report and give it to your tax professional for him to know how to use it. Yeah, you should be able to get that. Yeah.
All right. Thank you, Russell. I have another question. Can I claim the fees the bank charges for a business account?
A lot of people don't take it because they don't do bookkeeping. If you do bookkeeping and at the end of the month, your accountant does what is called bank reconciliation. He's going to reconcile what the bank has as an expense to you with what you have in your book as an expense. What does that mean? In your book, you have everything that you spend money on. It's in your book, right? The bank also has that, but your book doesn't have those fees that the bank charge you. So when you do the reconciliation, they're going to spot those fees and bring those fees back into your booking as expenses. And almost nobody takes it because they don't even know what it is. Yes, those fees you can take it in your taxes. Yeah. When you do a reconciliation.
Thank you. I have another question still. If you don't have a student loan but pay tuition out of pocket, can you still claim it in your taxes?
I just told you here that what you pay, yes, you take something, but there's so many limitations whether you plan in advance. I told you that you can spend up to, I have a webinar when I'm explaining how you can take $150,000 in 1 year as education expense. That means your gross income was $200,000, right? And then because of maybe your, not only yours, maybe your education, your wife, your children, it goes up to, I don't know, $150,000. You can take up to that. I have a webinar when I'm explaining how to do it. Yes, but if you didn't do nothing at all, and you spend $150,000, maybe for you combined with your children, everybody, I mean, I'm sorry to tell you, maybe you can only take 2,000 or 2,500 as a deduction or credit, your taxes. Yeah, you have to plan anytime you have a life event. You know, going to school is a big investment. That occurs when you have to spend money. Whenever you have to spend money, you have to consult. It doesn't matter whether they're going to charge you, I don't know, $250 per an hour or 500, I mean, they're going to charge you 1,000 to plan everything for you. But the overall thing you are saving is a lot. How much would you be saving if you spend $40,000 and then you can grab up those $40,000 in 1 year in your taxes, in your gross income? So basically, yes, you can take it if you pay out of pocket. You can take it, yeah. There are questions there.
Thank you. So we should all come like education, you're buying a car, just, you know, ask the question. And I think for a lot of us, if you already have someone that you're dealing with, you can just give them a call and, you know, do a business consultation and find out. Because we do run into a lot of expenses, like educational expenses, for example, and we are not asking those questions. So we need to ask those questions before we start making large purchases and see how it affects our taxes. So your CPA should be your best friend. All right, thank you. Yeah, Derek, you have a question? Your hand is up. All right, so do we have any other questions? Any other questions?
You can ask questions also about the PPP or the EIDL. Yeah.
So, Mr. Russell, I have one more question. I don't know if you answered it already. I doubt it. But so if you do a lot of businesses overseas and getting a lot of receipts can be a struggle. So how do you go about it? Is it just how you send the money? And like, I don't know how to put this. So you do business overseas and you send money, but there is no receipt that comes back to you as to how the purchase is being made. Like, how do you go about it in your taxes, and how do you claim that amount of money that was actually spent, especially if you don't have, right now, you could say you don't have a proof, but you know that you had sent the money because you do have that bank transaction. I don't know.
You need to know that normally the IRS goes assume that people are in a good faith when they are selling stuff. Okay, that's the reason why they don't audit everybody. Otherwise, they will audit everybody. Right? Yeah, you can attest that. And the tax professional can use maybe your bank, if you can have a traceability that this money on your bank statement went to this company overseas to purchase stuff, even though we didn't receive, even the paid invoice. But normally you should be able to receive an invoice because before you make a payment, you should receive an invoice, like a pro forma or, an estimate of what you need. Yeah, have them send you. If in worst case scenario, you don't have one, yes, we can go to the way that we can assume that you are in good faith when you are filming those stuff. And your bank, if it shows how much money it went out and which company or which bank account it went to, yeah, we as a tax professional, we don't investigate on what you are saying is true or no. We tell you what you should do. If you tell us that, okay, I spend money on this, I need to get the proof, the element, and you can say that, oh, they didn't send it to me. I don't have to say, okay, I'm not going to get because you said to me. I will say, okay, at least do you have your bank statement? Can you show me on it? Once you show me, if you are not in good faith, and the IRS discover that, you will be the one in trouble. but yes, you can use this.
Being
you can
safe.
use this to do it. Yeah,
Okay, thank you.
no problem. And what I want to add is that even people working overseas, I have people working overseas, but they don't know how to get the taxes. If you're working overseas or you conducting business overseas, not only purchasing, you actually have conducting business over there, selling stuff. I don't know, in Jamaica or in Italy, in France, in Cameroon, you are conducting business over there. What people will generally do, they will just hide what they have done overseas, but they don't know that you can still claim it. But what you do is that you also claim the tax that you have paid in that country, and those taxes could be considered as a tax credit against your taxes here. Okay, those taxes could be taken against your taxes here. So yes, if you are going to do business overseas and you have a profit over there, yes, you can actually bring them back, even though not conducting business, you are just working. You are a W-2 worker overseas. I have many customers. People are still gone. I have many clients who sometimes they will go to, I don't know, Ghana, Nigeria, and they're working over there. Maybe he's working over there, the wife is working here. When it comes to taxes, you can actually send the equivalence of the pay stub, right? Because when you are working anywhere in the world, they will issue you a pay stub, right? So we use those pay stub because the pay stub also show how much tax was collected. So those taxes are used against the tax over here in the US. And if very few people don't know. Yeah.
So I think I have a follow-up question to that as well. If we are conducting business overseas and we have proof, so does it have to be just the income? Say, for example, I am doing in an import and import business, and I import my goods into the US, for example. And I'm making sales here in the US. Can I use so can I show proof of the amount I have paid for shipping and handling and the cost of those products, bringing them into the US? I can add them to my taxes as well.
First of all, what you need to do is that over there, you need to consult with some people like us, consult with an accounting expert who is going to actually create your financial statement. Okay, he's going to create a financial statement for you to know how much money comes in, how much came out, and what was the profit. And if you pay taxes, your income statement will show it. Just like right now, in order to give people the money that they deserve on the PPP and EIDL, one of the conditions is the income statement. How do we actually come up with the income statement? We have to send you guys, I think some people here have received already. I will send you guys a link that you are going to use to actually provide all the income that you have received during the 2020. And also you're going to report all the expenses that you have made during the tax year. And then we will come up with a net profit or net loss from January to December, right? You will see how the company was. That is what we use. Same thing over there. Over there, you can hire an accountant. Of course, over there is cheaper than here. So they will do that at a really cheap price for you. You just tell them that this is the element that I need something. If it's an accounting firm, of course, they're going to do it and actually issue an income statement created by this company, and you can actually use them here. Just as when you're working there, you bring your pay stub. Your pay stub is from the company you're working for. It's a supporting document right here. Your tax officer will actually take a copy of it and put it in your file. This is your supporting document that you have to take whether it's credit or whatever you want to take because of those operations overseas. I want you guys to ask questions because our consulting fee is like $250. So when you go to the webinar, I like people to ask questions because it's an opportunity for you guys to ask questions that you have. Because whenever you will call because you have a problem, we can charge you by hour if it's not a full tax planning that you want to. Yeah, and you guys need to start working with tax professional. Everybody, if you are making $75,000 a year, sometimes I tell people that if you are making $75,000 a year, you have to consult. Why? Because sometimes the average amount you can spend on mortgage, which is the higher expense that somebody can make during the year, is a more. I mean, when I say mortgage, I say housing. Housing. Even though you pay for mortgage 1,500 for 12 months, what is that? Times 12. That is $18,000, which is the higher expense in the household. It's a mortgage. I mean, the rent, right? That's the higher expense. The rent maybe it comes what grocery and stuff. So if your higher expense, if you're paying 1,500, it's only 18,000, and then you're making 75,000 minus 75. So how do you go about saving in taxes on the $57,000? You don't have those money in your bank account. That means you spend the money anyway. So how do you go about to save those? That is where tax planning comes in, because you can go to the past year. You can start trying to itemize everything that you spend the money on, what you can remember of, okay, what you can remember, and then your tax planning, your tax professional will actually help you to structure those same expense the way that everything remaining the same, you will take tax credit or tax saving on it. Whether it's on the business, on the individual side. This is how it works.
Thank you, Russell. I have another question here. All right, it says, can I deduct an expense I did in 2018 in my taxes for 2020? So a 2018 expense. Yeah, Herge wants to know if they can deduct it in 2020 taxes.
A normal expense belongs to the tax year, but I said earlier during my speech that if you are conducting a business and it's a part of your business, maybe you spend something on 2018, you spend the money on 2019 and 2020, because it's a process maybe to create your business. You can take all of those expenses, given that you didn't take those expenses during those tax year. Okay, if you spend the money in 2018, but you didn't take that expense 2018, you can take it this year. If it's at the beginning of your business, but you cannot conduct this business on the normal way of doing your business, you make expense this year, you don't take it because you didn't record it. Then next year you want to take it. No, you didn't record it, you lose it. Okay, if you didn't record that's the reason why you have to record your tax, because a lot of people will be losing, because I just told you that if you're making $75,000, you pay $18,000 income. I mean, rent. You have $75,000. If somebody can go into your mind, use any type of software to identify any single expense, they will see all the expense that you made. But you just cannot remember, you're not a computer, right? So next year, you're not going to say, okay, you know what? Last year, oh, I remember now one of the expenses was $5,000. I didn't take it. Can I take it now? No, you just cannot. That's the reason why you have to track your expenses. That's the best. It's the best way to save taxes. It's the first step to save taxes. You have to trace your expenses. And I help you guys because I have this software or this tool that I use with my customer that I will be able to share with the people who are actually present on this webinar. So I'm going to share this with you. That is going to help you to trace your expenses. Okay? I normally do it with my customer because, if he's missing transaction, the financial statement is not going to be current. It's not going to be current because they are missing things. So it's the way to help them, reminding them to be able to record every single, not only income, but also expenses in the daily basis. So I'm going to share the link here. So whoever is attending this webinar is going to be able to get a copy of it in your computer, and just every day you're going to record this more or less an application that I use with all my customers, because now you don't always have to work to everybody. So we developed this type of tool that helps us to remind our customer to record the income and expense. That means it helps us to actually do the bookkeeping. Because if you have to do the bookkeeping, somebody's going to send you a bunch of paperwork. Sometimes it's a gas receipt that you can't even see very well what is written on it. Sometimes it's more work, sometimes with less result. right? Because by the way, they want to lose some of those receipts. If you are still focusing on them scanning everything or send it by post, you're still going to lose it. So there's a way that every day that you make an expense, even though when you are conducting your business, you eat $20 food, $50 food. Yes, when you go back home, just record it and forget about it. As you are doing nothing, then it's adding up to be a very way to track your income and expense. So I'm going to share that with you in a few seconds. As you guys are coming with new question, I'm checking on my computer right now.
Oh my God, thank you so much, Russell. We appreciate that. That will help us tremendously, especially in the new age where we're always on our computers. We can easily enter into those incomes and expenses into the system. That'll make life a lot easier for us. Thank you so much.
I have a question. I have a question. What happened is that let's say last year I began the business that I'm in. And then what happened is I bought all these products, okay? And I still haven't made a profit on it. But what's happened is this year anyway, I just want to know, can I claim the products that was bought from last year as a loss? Because you got into the business. No, I just want to know how to put it in the taxes for this year because the business started last year. And how can I add it to my,
The business started last year. You mean you didn't account for it? You didn't record it in your taxes? That's what you mean?
No, it's this past year. I mean, let's say in December, some purchases were made.
Oh, 2020.
Yes, 2020, yes. So that I can do when I do my taxes this year. So can I put those as a business, part of my business expense that these products were bought?
No, you purchased product to resell it, right?
Correct. Yes.
Yeah. But you didn't make income, right?
No, not yet, no.
Yes. Your income statement will show $0 income and maybe $10,000 expense, which is merchandises. So your net income is going to be negative 10,000. That is net loss.
Okay, so I think I'm going to ask this question as well because it pertains to a lot of us that are new business owners who are just starting. If we have, and also applies to, because I was going to ask the question on the PPP as well.
Yes.
If we started a business and we have an investment of over, let's say $1,000 in inventory, and in 2020 we were not able to sell those inventory, so we probably had it on an Amazon or eBay, and we have not been able to sell those products yet. And we have expenses that we put in, maybe shipping costs, advertising costs, that we're going to deduct in 2020. How do we didn't make any profit, so how does that now apply to us? Do we have all the products that we have bought for 2020 as part of our, where does it come under in our taxes for that inventory that we have?
So the inventory that you have, you purchase those inventory, right? When did you purchase the inventory? In 2020, right?
Yes, in 2020, yes.
But you didn't make sales on those inventory.
Correct.
Or maybe you only made 2 or 3 sales, right?
Correct.
Yeah, of course. What you're going to claim is that it's going to be a loss. It's going to be a loss if you didn't make income. But that's the reason why you have to file tax. You might think, okay, you know what? I don't even have to file tax because I didn't sell nothing. No, you have to file, even though it's not registered. That's also what people don't know. Even though that business is not actually officially registered, you can still put it in your taxes. But if you want to take those losses, you have to document everything that you're doing. Because when it comes to losses, they have to say, can you give me your sales report? Can you give me your income statement where you were recording every transaction every day, where you were recording all the sales? You said, I spend money on this thing. They don't want you to send a bunch of receipts. They're not going to have time to open every receipt to see where the receipt is coming from. They don't have that time. They want to see your book report. Now, if they want to see the proof of the transaction, on your book, they will say, okay, can you give me the receipt for this transaction that you say you made on this year? Then you go into your, whatever you put, you pack all the receipt, you remove it, you send it to them. But don't think that you're going to send a bunch of receipts to have them set it up and opening it to start checking on it. No, because when you do the transaction, all those information are in your bookkeeping. All those information.
Yes.
The thing I'm going to send you, you may also record those information when you are tracking your transaction and your income every day on the tool I'm going to share with you in the next 2 minutes. Yeah.
All right. Thank you so much. I think that's very helpful for those of us that are in the business of stocking inventory that we have not been able to dispose of yet. So that way we know that we can actually file our taxes still, especially for some of us that are sole proprietors. We do have E&I numbers. We can go ahead and contact our CPAs or contact Mr. Russell if we don't have one and file our taxes. All right. So I don't see any other questions here. Mr. Russell, we are so grateful. I think we'll wrap up today's webinar. It's been very informative. I want to say thank you so much to Mr. Russell for coming to teach today. I'm going to hand over to my co-host now to close us out. We have Caroline Orlock and Rosalind Chua. So I think Ms. Caroline, can you go first, please?
Okay, I just want to say thank you so much, Mr. Folas. We really appreciate you being here with us today. And I've learned a lot more today than before, more in detail, because no one ever tells you what you need to do. But I think we'll still be reaching out to you and referring. Which state are you in?
In New Jersey.
Okay. It's always good to know, because a lot of people will always ask me where, is there somebody, not a reputable, but a good accountant that you can work with. Especially, we like to support our own people in the community as well.
Yeah.
So we appreciate you. Thank you.
No problem. It's my pleasure to share with my community and help.
I need this template here.
So this is basically what I was talking about. On this thing, every day, let's say today you spend, what was the transaction? Today is what, 01/23/2021. Then I made maybe, I purchased something, maybe inventory.
Okay.
Inventory purchase. Maybe the inventory is what? It's a chair. Maybe you're selling chairs. How do you purchase that inventory? The price was 300. How do you purchase that? Was it by cash, by card, by Zelle? How do you purchase it? You can actually put here. Okay, I purchased it by cash because I went to the store. I actually paid cash, or I make a Zelle transfer to them, or I pay by credit card. You just pick here, and you can actually put here something that is related, like you can put something that will remind you what was this about. Okay, this is the note. You do this every day when you go up at the end of when you want to go to bed. You just open this on your computer. You just put this information. This is this is actually income. This is the income portion right here. Okay, this is the income. So this is actually let's say chair, because I sold the chair today. I purchased chair, I buy chair and I will sell them. So chair, okay, I put the amount they pay me by card. If it's an expense instead, it's over here. Let's say over here I put gas in my car. This amount here, $21.95. I pay by card. Over here, I ship products. Maybe you're selling stuff fulfilled by merchant. That means you have it, you have to send it by yourself to your customer. Maybe you spend money on it, or maybe you are purchasing some inventory overseas or in any store. You also have to pay for shipping fee. It's over here. Anything that you do, when you put here, you pick what type of payment do you actually use to make that payment. What is the means of payment? You put the note over here. Okay, for example, over here, delivery expense, cards, LLC certificate of filing. That means you pay for the certificate of filing and you pay the delivery to move from where it was to you. So this is everything that you need to, okay, car wash right here, you wash your car. How much was it? 18,000, you pay by card over here. So once you do that, you will remember everything at the end. If you have an accountant to actually pull it into an accounting system, it's easier for him to do your bookkeeping. If you don't have an accountant, at least you can see your transaction. Okay, so that's what I only use it with my customer because it's a way for me to track everything that they are doing. Okay, I go into it, I see what they have done, and then I record it in the booking system. And at the end of the year, the month, I will create the income statement for them. The income statement will tell them if the business is going up or down. Okay, so if it's going down, why is it going down? We compare that with the previous month to see what's made the business going down. Maybe it was less sales compared to last month. Maybe it was too much expenses compared to last month. You know, your profit can decrease because you make less sales or you make too much expenses. So when it's combining, you can compare month to month to get a good financial analysis of your business and get what is called informed decision on what you want to do about your business and help you to reach your goal. Yes. So yeah, I'm going to share this link. This is the link right here. I'm going to pick this link right here and share it with you guys. I'm going to share it on the comment section of this webinar, so everybody can have a copy. See, it's only for people working on who starts in accounting. And I'm going to make it editable to everyone that is going to be able. That's good. That is watching this webinar right now. So, why is the comment section of this thing? Yes, I just pasted that for everyone. You just open it in your computer. Once you open it, I just post it. Once you open it, you can just bring a copy of it. Okay. Once you open it, everybody knows how to do it. Once you copy, bring a copy inside your computer. Once you have it, then you start using it. Okay. Yeah. So this is basically, and about the PPP, what we do with the PPP is that we are trying to gather the 12-month report. These are the 12-month report that we are gathering from the PPP to create a financial report for people. So basically, I'm going to take maybe if I take this one, it just for example. Okay, if I take this one, what you see here is that, let's say I'm going to remove this information, is that we need to recap of all of the year. So you have to think about how much did you make in sales during the year from January to now. Even though you didn't record somewhere, you are the best person to make the guess to know how much you made from January to December. Once you provide those information, you also provide the recap expenses. These are all the expenses. Of course, some will not apply to you, depending on what activity you're doing. You record all of these expenses. Now, your CPA will now come up with what is called income statement, because you have in one side your income, the other side your expense. Now we will create those expenses. We will put them against each other to compare the activity month by month and quarter by quarter to come up with a loss of at least 25% or 30%, depending on whether we are trying to get the PPP or the EIDL. So this is basically what we send into each of our clients to provide all of this information. Once they provide this information, then my team actually work to create those income statements for the 12 months, and we can put one against each other and compare a quarter against other quarter, and also go back to 2019 to compare to see where we can see the decrease, and now come up to say, yes, this person actually is eligible to get the money because he financially, he lost 20% or 70%. Some people even lost 30% because from January, this person, because from April, they didn't work no more because of COVID. That means it will be 30% decrease. The person is actually on the unemployment. it doesn't prevent the person to still be eligible for this, because you may have been working and you also have a business. If you are working, you're supposed to get something from your work. But if you also have a business, if the business has an issue, yes, you can still apply and get all of this even though you are working, because this concerns only your business. If because of COVID you have lost your business, yes, you can show that, okay, from the COVID, I have 100% loss of income. So I mean, I have a lot of losses. Okay, when you have no income, but you still have expense, because you know you have so many fixed expenses, that your phone bill, you cannot reduce your phone bill, your rent, you cannot reduce your rent. So your internet, there are so many expenses that you still have to pay for, even though you stop making income from your own business. The financial statement actually helps to see how much is the loss, and it helps you now be eligible to get all of this money. Yeah, this was what I also want to share with you. So I want to share with you about this document right here. Over here, you just put your business entity here, and then you're good to go. There are so many things there.
Russell, please. The link you just sent, can you send it to to me via WhatsApp too, please? Because I'm following this webinar via my phone.
So who is talking right now?
Stefan.
Stefan Bao?
Yeah.
Okay, I'm going to send it to you, Stefan.
Thank you.
No problem.
All right. So Russell, can you share your contact information on the chat box so people that need to contact you can get it?
Okay. Basically, what is going to be what you see here. If you have this, the first thing is that if you receive this, then you can contact us from here. Over here, you can book a calendar with us. But basically, generally speaking, I'm going to send the chat. On the chat, I'm going to send our numbers and the link you can use to contact us if you want to book an appointment. So the numbers here, 862-862-955.
Hey, Mr. Russell.
Yes.
So question for you, the document that you just sent over, if
Yes.
we opened it up, we need to make a copy, because then if we go through Google Sheets, it's like you're in it, it's like a Google Doc.
Yes, that's what I said.
Right.
You have to make a copy.
What?
You have to make a copy over here. I show.
Yeah,
Can you
okay. All right, I did that. So I just kind of got out of the one that you had.
Yes, I gave you the template. From the template, get the copy of yourself.
Okay.
So you can use it. Now you can share that if you want to share those information with somebody because he wants those to help you on doing something, whatever it is. Okay.
All right, so I was able to download mine on my system, and
You can either download or make a copy.
Download or make a copy. Okay.
Yeah.
That's good.
You just remove all the data on it.
Yeah.
And then you can do whatever you want to do with it, and just put your own data basically.
Thank you so much.
So 862.
So another question I'll quickly ask, since you're sharing the PPP information with us, is is there an income limit for small businesses that can register? Because I'll give an example. If in 2019, I started a business in 2019, say December, and of course I have a lot of inventory, say worth about $20,000.
Yes.
And in 2020, I probably was able to do a couple of sales since it was a new business starting at the beginning of the year. So January, February, March, until COVID happened. And I was not able to generate any income from that business from that time forward. What do I do in that instance? Am I still eligible to apply for the PPP?
The PPP is based on the net profit.
Mr. Russell, you're muted. Can you unmute yourself?
the EIDL is based on the gross sales, gross profit. By gross profit is technically is basically your gross sales minus what is called cost of goods sold. But sometimes if the cost of goods sold is zero, the gross profit, the gross sales is also the gross profit. That's why sometimes we talk about, I'm just refer it to gross sales because it's checking on how much income you made, not how much profit. Okay. So if you made expenses, you didn't make sales, that means your profit will be zero, or maybe you have a net loss. Then you cannot apply for PPP because the PPP is based on the net profit. Okay. But if you have employees, by the way, if you have employees, you can still have it because you're going to be based now on the how much you pay your employees. But your own compensation when you are self-employed and you don't have a payroll on yourself. By the way, that is one of the tax strategies that next time I will explain to you that you can actually put yourself on the payroll. Even though your business has a loss, you can still put yourself on the payroll and take that loss. You can put your children, your wife, your husband, your mother, you can put the family in the payroll. There's a tax advantage of you putting your family on the payroll because sometimes you don't have to pay payroll tax. So that is what a lot of people will be missing. If you are making, let's say $40,000 profit, imagine that you pay yourself $25,000. That means your net profit is only $15,000. That means you should be paying tax only on $15,000 instead of paying tax on $40,000. Yeah. So if your net sales, your net profit is negative, then you cannot apply for PPP. But if within all the expense you have some type of payroll that you pay, you will get the PPP based on the payroll. Now on the EID side, you are eligible for EID. It doesn't matter whether you make profit or not. It's based on the level of your sales. The more sales you have, the higher will be your net, your EIDL. So the higher your expense, the higher your sales, the higher will be your eligible amount for EIDL. But the good thing is that whether your income is high or low, on the EIDL, there is a $10,000 that you're eligible for. Okay, so whether you have 100 million of sales or only $10,000 sales, you still have the or just $5,000 sales, you still have $10,000, which is called EIDL advanced grant. It's a grant portion of the year. That's why I'm saying everybody should apply because you have nothing to lose. Even though you didn't make you only make one sales of $20, you're still eligible for the $10,000 grant. And people will be losing this opportunity. Yeah.
I think we all need to take advantage of it because a lot of businesses that started in 2020, especially at the beginning of the year, when COVID happened, there was nothing was going on. Just like the example someone gave, they started a business towards the end of the year, and because of COVID not having the ability to move around and establish their business, they have been stuck. So please, let's all consult our tax advisors and CPAs to find out about the small business loans. As entrepreneurs, as we're starting our entrepreneurial journey, or those of us that already have already started, we need to be able to take advantage of the tax benefits that can accrue to us. So at this point, we want to say thank you again to Mr. Russell, and as well, we're going to ask Rosalind Chua to close us out today. Mr. Russell, I see that we're going to definitely have another class scheduled. We will contact you.
No problem. It's always going to be my pleasure. I mean, I wish when I was in the business, I have some of friends or people from the community to help me like this, Yeah, I wish, but at least there's still always a beginning for something, right?
Yes, definitely.
Can I ask one more question? Because one more, and I want to leave you alone, please. Because we're doing business overseas. No, because we're doing business overseas, what's happened is that we have to have a storefront, and I have to pay rent for it. So I can still go ahead and, of course, when I send the money, I itemize it as rent, but then of course get the receipt from there. I can still claim it here, correct? Because it's under this particular business.
Yes, you can still claim everything that you make, even though it's overseas, as long as you are also reporting any income that you are making overseas. As whether the income is high or low, if you are reporting the income overseas, you are also reporting the expense, then you're good. Do not only report the expense, but I don't know, $1,000 or $5,000 you report over there, you don't report. So yes, if you didn't make no money over there, it was only expense. Yes, report those expense.
Okay. Yeah, it will be because it's the same company. It's just that the business is here there as well. Okay.
Yeah.
All right.
And I would just quickly like to use this opportunity to invite everyone that is here, that we have a business here in the United States, a great company that we're partnering with that is also in most African countries for those of us that are present. So if you would like to key into that business opportunity, you can contact either myself, Caroline Olok, or Rosalind Chunwa. It's a great opportunity for us to partner with our brothers and sisters back home as well. Oh, I forgot, we have one more partner, business partner, Ms. Yada is here present as well. I just saw the hand raised up. So please do contact us. It's a great business opportunity for us here in the US and those of our family and friends back home. We are available. We're going to share our phone numbers on the chat. So please do give us a call and we will give you more information. Thank you. So we'll hand over to Rosalie now to finally close us out from this meeting. Thank you, Rosalie.
Finally, I'm super excited. I've gotten a lot of information, and I know a lot of people here too got a lot of information. Thank you, Mr. Russell. I want to thank everybody who really stayed over and waited and listened to him. He's a wealth of knowledge, and we're really appreciative of your time. And we hope that most of us will be reaching back to you and just asking you questions and, of course, becoming clients in the future. And like Ty already said, honestly, if you're still sitting on the fence and you haven't started your own business, or you are actually in business, but then you are kind of just don't know if you're doing well or not, there is a business out there that can benefit a lot of us and has benefited millions of people all around the world. And we are super excited and super pumped to share it with you. It's something that's changed a lot of lives, and we are excited to share it with you here in the United States. And it's not just a business that you can do here. I think about it as a global business. It is global because you can do it from anywhere, and you can do it from the comfort of your home. You don't have to be in Ghana, Cameroon, any part of Africa, or even in the UK to do this. You can do it from anywhere. So we're super excited to share this information with you. And Ty will be leaving our information underneath. And if you're watching from home and you have questions, please feel free to reach out to us. We're always available to answer questions. And of course, Mr. Russell is always available. New Jersey is right behind my backyard. I'm so excited. Maybe I should come for a real visit. Anyways, thank you everyone for being here and hanging out with us this whole time. We appreciate you, and we hope to see you very soon again. Tax season is coming up. Maybe we'll see you one more time, Mr. Russell, right?
No problem.
Don't commit to anything, but we hope to see you again before the tax season.
We're gonna commit here.
Yeah,
right now.
okay, great. It's so nice seeing everyone, and we look forward to hearing from you.
Thank you.
Thank you. Back to you, Ty.
All right, thank you, Rosalind. There's a comment from Ms. Brenda. It says, I'm a new client so far. It's phenomenal, great follow-up and knowledgeable. So Mr. Russell, for the people that are on here, kudos to you. We appreciate you. Like I said, it's so exciting for me to present this class today and have Mr. Russell as our guest. Not just the fact that he's phenomenal, like Brenda has just said, just being able to impact, because I always have this problem. I'm a lawyer by profession, and when I need to answer a question, I just go all legal, and people just start asking, I'm not following you. And to have someone break it down like this, and he's a professional at what he does, but at the same time, he has come down to our level. Sometimes when I was explaining just now, I was like, okay, where are you going with this? But, you know, he has been able to articulate to us, and we understand what he has just said to us. I mean, I saw a lot of people that had their videos on, were taking notes, and so I know that we'll definitely be contacting him again to teach another class. And I just want to say thank you for everyone that logged in today, and also going to following us on our Facebook page. We appreciate you all. And thank you for hanging on. Like, this is one great class. People actually stayed on and they listened. So you can tell that, you know, Mr. Russell has really impacted us today. So thank you so much. We can unmute ourselves and say hi to each other. Maybe show your video if you want to.
Yes.
I'm always excited to see everyone.
Yes, yes.
Hi, Caroline.
Hi, how are you, Rosalind? Good
I'm
to see you today.
good. So good to see you.
Yes, everyone. Hi, Brenda.
Hi, Brenda.
Hi, Damien. I know Damien at work.
Hi,
Hi,
Stefan.
Stefan. Nice to meet you all.
Hello.
Hi.
Hi.
All right, so we have Mr. Hamerick, Adele, Benjamin. Okay, Russell, that's still you. That's the other line you were working on. Well, so thank you, everyone. We appreciate you. See, we don't want to even leave now. See, Russell,
I know.
How are your businesses doing? How you guys doing?
What we're going to do, we're going to schedule another one. Just for another one. I'll be more than welcome. Okay? And you guys can get your question, and it will be my pleasure to explain you guys. Yes. You have there is a lot for you guys to take advantage of. Maybe in the next meeting, I will go into too much deep into what the CARES Act has available for you.
Yes,
Okay?
that
You
would be
have to
great.
know that before you file your taxes. Basically, you have to know.
Yes, I need that.
Yeah.
So the next class, we already know what we're doing. So we're not just talking about tax planning now. We already know what we're next class Russell is going to teach will be on the PPP, the CARES Act program that's currently in progress. Is there a deadline for that, Mr. Russell?
No, there's no deadline. Those programs, no, there's no deadline. Just that when it comes to money, when the money runs out, then the program is over.
Okay, all right. We will definitely be contacting you and scheduling a class. All right. Have a great evening, everyone. Have a great weekend, and we'll see you soon.
Thank you.
Okay. Thank you.
Everyone.
Bye, everyone.
Bye, everyone. Nice to see you all.
Okay.
Bye. Bye-bye.